Quantum computing is about to disrupt nearly everything from AI, cybersecurity, medicine, finance. Trillions of dollars are on the line, and the smartest investors are positioning themselves now before the masses start to catch on. So, in this video, we're going to be breaking down the top 5 quantum computing stocks set to explode over the next decade. Now, of course, AI has been moving at an exponential pace, but listen, guys, if you want to learn how to trade quantum computing, AI, space, and tech stocks in real time, and watch me trade live tomorrow at Market Open, hit the second link in the description. Let's get you in the game before Wall Street even wakes up. So let's take a look. The first stock for our top 5 quantum computing companies. It's going to be one of the big hitters. It's going to be IBM. Now, we're going to go from top 5 down to number 1. So stay tuned. Make sure that you get these stocks on your watch list. IBM is backed by a $60 billion plus revenue tech giants, right? With R&D funding, they got a lot of research and development. They recently pulled back. You can see they have their IBM Quantum network. So they've got Fortune 500 companies, government agencies, tons of universities. When I went to CES, I was so surprised by the in-depth footprints that IBM has in the quantum computing space. Really strong government and enterprise contracts, including the US Department of Energy. And I think they're the backers of basically all the companies we're going to be going into today for the smaller cap quantum stocks. So for IBM, you can see this trend. This is coming back from August 2023. It recently pulled back. This is a little bit of a not the best uptrend. There you go. Okay, so that's a little more accurate. As you can see, it recently pulled back from highs of $266 down to about $243. So it's looking like more of a buy. Now, there's a couple things we're looking for confirmation. The RSI, MACD do look a little bit more on the oversold side, especially if we drop into a little bit longer time frame there. And you can see that it's trying to recover, kind of bounced here at the support. It is below this EMA, so what we'd like to see is a break above this EMA back into this $250 range. 255 would be really good, kind of touching that 200-day moving average. And that would indicate more of a continuation of this uptrend. Now, if we see it recover, they have some 2x companies you could trade that shift up 2% or down 2% when IBM goes up or down 1%. But just from the IBM standpoint to previous highs would be about 8% increase to where it's at right now in this 200-day moving average. It's about 3%. When you look at the downside, it is a little bit, seems kind of just overall overextended, but I like it as a company to watch. They got that first mover advantage in quantum. So they're one of the first companies to commercialize quantum computing research. And if you take a look at IBM Quantum just recently announced they made over $1 billion in revenue from their quantum division. And if you check out their quantum computing on their website, it's quantum as a service, they call it. So it's a cloud-based quantum computing experience with their website allowing you to tap into quantum computers through the cloud. So you can use them kind of like how you would tap into GPUs. And you can see pricing over here in quantum. They have a catalog. That was the wrong button. There we go. We know the California laws. Okay. They're accelerate utility development with Qiskit functions. And you can see some of the companies. They got machine learnings. If you want to do that, you can do chemistry. So one thing about quantum computers, the hybrid computing model essentially is mixing classical computers with the quantum computers. And while a classical computer or a GPU powered computer can, let's say, visualize and experience a chemical reaction kind of on the high level overview of the different chemicals involved, and when they're maybe changing in their temperatures or changing in the different mixtures and which chemicals are reacting. when it comes to quantum computing, they solve down to the molecules, down to the electrons, and those are the types of super high frequency movements that only a quantum computer is able to measure because of its high frequency movements. You're going to find quantum computing is just perfect for those types of chemistry measurements. And on top of that, they're working with, again, machine learning. They're in the finance space. If you wanted to build apps for circuit function or just basically solving any problem, you can. Now, here's one of the cons with IBM and why I would just kind of approach it with some caution. And it seemed this way when I was listening to them talk at CES, is that despite their leadership, right, and despite all of their growth, IBM's quantum hardware is still years away from the mass market adoption because they have this slow commercialization. They're a big company. They don't move quite as fast as some of the startups. They kind of just move and invest with the startups, and they have their own divisions of quantum, but they're a huge company. So that's something you gotta consider as they move a little bit slower. Now that's one of the cons. I personally like it. That's why I got number 5, and it's a good one for kind of long-term large cap growth. Let's jump into number 4. This is actually, before we get into some of the smaller caps, you got to include Google in here. They're backed by their $1.7 trillion market cap, one of the most powerful tech companies in the world. Obviously, it's Google. They got their quantum AI division, so it's among the best funded in quantum research labs globally. And they got strong partnerships with NASA and some of the elite universities. Now, what you could see with Google, if we jump back into their chart here and you take a look at what it looks like, this is the trend with Google. Obviously, they have had a very consistent trend, and there's a lot of things working for them. And that's like good as a long-term safe investment, but also bad if you're trying to capitalize on quantum. Like, yes, they have their Google Sycamore processor that completes like super complex tasks in 200 seconds that would take a supercomputer 10,000 years. Or they have their new Google Willow chip that they just launched for quantum computers. And that's AI integration with AI paired with a quantum computer is where they're starting to see a lot of breakthroughs. You also got the Google Cloud platform. So if you jump in there on Google Cloud with their quantum, you can see that they have the ability for you to tap into some of these other companies, the smaller companies, through Google Cloud. So you can see here, you got solutions and technologies. We're into quantum, and you can tap into some of the smaller companies. It's a little harder to find at this moment, but we're going to jump into it. I think it's IonQ. There it is. So if you wanted to tap into, for example, IonQ here, then you can. And you can get it on the Google Cloud Marketplace, and you basically search up the company, and then you can tap into the quantum computer through the cloud. That's something to consider. But that's really good to see that they're one of the companies on the list because they have the ability to develop extreme programs for quantum to be able to do quantum computing at scale, and they don't really have any immediate pressure for profitability. They already have YouTube, they already have Google search engine, so that's good. But one big con about investing in Google, while they're down right now, and you see this trend and the recovery right there to previous highs would be about 30%. The RSI, the MACD, more looking like a buy after this recent market correction. They still don't have the direct exposure to quantum computing. So the quantum computing just makes up a tiny fraction of Alphabet's overall revenue. And investing in Google, it doesn't give you that pure play exposure. So let's get into number 3, which gives you the pure play exposure and still has some of the advantages of Google, and that is IonQ. IonQ. This is a company that we've seen recently recover and bounce on the 200-day moving average. And guess what? They're backed by Google, by Amazon, and Lockheed Martin, and others, NVIDIA, and they've received DARPA and National Science Foundation funding for national security applications, and they're one of the best funded pure play quantum companies. They've raised over $600 million. Now, if you take a look at their website here, you can see they got the trapped ion technology. So unlike IBM or like Google, they use the superconducting qubits. IonQ's trapped ion approach is a lot more stable and can be more scalable. You can see they work in battery tech, improved drug discovery. So battery tech, they took 25 years worth of knowledge, dropped it into a quantum computer, and got it down to 8 options. Ran it through some AI, and then ran it through the quantum computer again, and also had their researchers explore the 8 options. And within 6 months, they were able to improve the efficiency of the lithium ion battery by 70%. That's right, better battery materials here. They got improved drug discovery. So again, down to that molecular level, they're learning how to bind peptide proteins and find potentially how to bind peptide proteins means what? You find vaccines. What types of vaccines? They're specifically looking at cancer. That's where they're at. So with quantum computing, solving really big problems makes sense. Also, direct carbon sequestration. So pulling carbon out of the air, that's good. That could definitely help with, as if we see increased carbon in the atmosphere, this company is able to essentially scrub the air to get carbon out of it. That's pretty epic. They're also got this, they have this cloud first approach. So unlike IBM and Google, like IBM has the cloud approach, they have the cloud, but they're part of that is that they're offering access to IonQ. So IonQ is the actual company that you tap into through the cloud on, for example, AWS. So you can search AWS, go over to Amazon's cloud, and you can tap into this quantum computer through the cloud. Same thing with Microsoft Azure. So you could jump in there, and Google Cloud, but Microsoft Azure is a big one. So Microsoft, they're kind of like a big umbrella of, and a lot of backers, or a lot of the backers are like for IonQ are IBM, Google, but definitely Microsoft as well. So Microsoft backs a lot of these smaller companies. Here's the thing about IonQ. When we're looking at the chart, they got multiple commercial deals, partnerships, and they're on the path to profitability. I would say faster than most competitors, but they're still early stage. And while we see them bounce at this 200-day moving average, and recovery here to previous highs could be 100% or 150%. That's great. Some of the quantum computing markets have been, stocks have been growing very fast the last few days. But when it comes to their early stage, their tech, they got really good tech, but IonQ's not yet generating significant revenue. So it makes it kind of a high risk investment. Obviously, you got big investors like BlackRock or Charles Schwab or State Street in them as well, investing in them. But the company, if you take a look at their IonQ financials, we don't really need to look at, obviously IBM financials or Google financials, because you don't really get a good look at quantum specifically. So it's not really worth it. But with these smaller companies, you get to see how much money they're making. And here's the deal. Their revenue is up 91% year over year. So they're seeing more revenue. $11 million, 11.7 in the quarter 4 of 2024. But the net income's still down. You see net income is negative 200 million. So as we said, they raised 600 million, but if they lose 200 million in that quarter, right, that's quite the negative net profit margin. So they're beating their revenue goals, but their earnings per share is down, and you gotta look at that and just realize it's high risk because of that. Now, quantum computing is an emerging tech. That's great. But again, you have to consider some of those financials and look at them, take them with a grain of salt, right? Because you're buying what could be. But when I mean they're bitter financials, and they don't look too pretty. But again, you're buying the thought that they are having big partnerships and seeing massive increases in revenue as a result of AI and more computing power that's needed or things like that. And you need to do it, not only get computing power, but do it in a way that's efficient. Quantum computers come in, and that's where we see IonQ positioned well to take advantage of the boom of AI. So right now, revenue is not good, but then you got to ask yourself, why are all the big companies looking at them? Why do you have investments from some of the largest tech companies in the world and the biggest institutional holding companies in the world? That's what you got to ask yourself, and that's why I think they could scale and still see a lot of revenue, just looking at the interest from institutional investors. Now, Rigetti stock. This is number 3 of the quantum computing top 5. Rigetti. I love me some Rigetti spaghetti. I don't know about you guys, but we've been following this stock from back here in November. It was at about $1 a share. It surged to $21 a share before selling off. Now, when it was surging, it was so consistent almost every day in our live sessions. So if you guys know, we go live at Market Open and Stockmates, that second link in the description. If you want to watch me trade live tomorrow at Market Open at 6:30 a.m. Pacific, Monday through Friday, it's the second link down below. And when people get into Stockmate, we trade these companies. And I think we traded Rigetti. We must have traded it 20 times from the month of December to basically January. And then it sold off, and we basically waited it out, started to trade it on its way up, and then it pulled back. The trend upwards was consistent. The trend now is looking like it's starting to recover and break above the 200-day moving average. And so now as we see it break up, it's obviously a little overextended at this moment. We'd look for potentially a pullback. But there is a hyper bull case here, is that it uses this previous resistance at around $10.50 as a support. And we see it hold this 200-day moving average and start to get back into bullish territory. Now, if we see a recovery to previous highs, we'd be looking at somewhere between 100 to 110% margin for profit. So, it's quite the recovery. It's at $11 a share right now. And from the bottom of the crash that it had, when Jensen made some comments, the NVIDIA CEO said quantum computing is pretty far away. We'll see what he has to say in 4 days at the quantum conference in San Francisco. But 100% increase so far from that dip that it had down during the crash. So 100% up from the bottom of the dip. And you also have to look at it from a perspective of, they have venture capital firms. They're right there in San Francisco. They work with NASA. So if we take a look at Rigetti stock, take a look at their website, you can see their quantum computer here. Department of Energy, NASA, they're working with Oxford Instruments, AWS, Microsoft, the University of Edinburgh. They're also working with military applications. They raised $261 million via SPAC to scale its quantum technology. And if you take a look at the quantum initiative, so this is the $2.7 billion bill that potentially will get passed. You can see it here. It is a bill that we're awaiting to get passed through U.S. leadership, and it's a bipartisan effort to maintain U.S. leadership in quantum technology. If this bill passes, you can see some of the mentions are support of NASA, but support of IonQ is there as well. You can see IonQ is mentioned, and Rigetti, and you see IonQ their CEO Peter Chapman. So you got to look at the incoming funding from Stargate, the $500 billion that's coming in, but the deep integration into other companies. When you take a look at their quantum computer, they have this QPU. Let's take a look. So you go through, you got the signal chain, you got the temperature stages, you have the mixing chamber. Get down to the QPU. Take a look at this. Looks like you could fit a Google Willow chip or a Microsoft Majorana chip. Those new quantum chips you're seeing released by some of these big tech companies, looks like it fits perfectly inside the Rigetti quantum computer. So They got deep integration with US military and defense programs. So that makes them kind of strategic in the government side. Quantum computing for national security. Obviously, that's a factor when you have like China coming in with quantum computing or Russia. And it's like, what's the US doing? We got that going for us. One other big thing that's positive is that they can easily integrate with these other companies. You could see them usable through AWS. The negative is they're cash burning and their financials don't look too hot either. Again, it's more of buying what could be. So if you jump in, take a look at their stock. We like the chart. It looks like it's kind of recovering, but take a look at those quarter 4 financials. They were looking good earlier, like things were kind of heating up with the revenue, and then net income, they pay off some debt, they spend some extra money, and look at that, negative 152 million on the net income, revenues down. The cash burn. You got high research and development expenses. They're not profitable yet, and they've had some major. They've issued some more shares, so that kind of dilutes some investors. So they got cash burn and they got some dilution, and you got to keep that in mind. Now, on top of that, the institutional holdings, though, take a look at some of the companies that are invested. We know they have Nvidia. You could see they got BlackRock, Vanguard, State Street, you got JP Morgan Chase, Goldman Sachs. Those are all really good institutional capital amounts. I mean, look at it in the millions. That's what puts them at this $1 billion, $2 billion valuation. And so there's some institutional interest, obviously, because of some of their unique approach. They're superconducting quantum processors. They compete with IBM. They focus on modular quantum computing, and that allows them to scale very fast. And they're getting a lot of funding, and they're solving a lot of problems as a result. So they're also there in San Francisco. I think that could be good for them. So again, that's why they're coming in at number 2. Number 1 for quantum computing is D-Wave. So this is QBTS. This is the best pick for immediate impact. We covered it in depth for the past few weeks. And as we've been covering it basically back here since November, it's soared since November. And when we started really jumping into this one, let's take a look what that was. It soared about 900%. So it's really had some great recoveries recently from this sell-off in the Jensen announcements. It's actually at previous highs already, up to $10 a share, and it's well above the 200-day moving average. It is well above the EMA. It does look a little overextended. I mean, look at that big recovery to continue some of this trend. So now it's looking pretty overextended. I would imagine that we would see it sell off some. I don't know that it's going to sell off down to this previous resistance here, at 780, but I could see it sell down to $8 pretty easily. Now we'll see if it can break up into break above previous highs, and then possibly, if it does, use it as support. Otherwise, it does look overextended on the technical side. But why is it number 1? Well, they're backed by the same institutional investors, Jeff Bezos and the Canadian government. They got over 200 plus corporate customers. So if you take a look at D-Wave, they got Volkswagen, they got Lockheed Martin, and they also have NASA. The largest commercial quantum computing company seems to be them because of their practical usages today. So they're the first commercial quantum computing company, I think it was at 1998. Let's see, QBTS stock, we'll take a look real quick. Founded 1999, okay? So they've been around a while. They have this, if you take a look at their website, see this quantum computing. They demonstrate quantum supremacy on useful real-world problems. They're not as powerful as universal quantum computers, but it has practical use right now with their partnerships, because one of the biggest things we talk about is, okay, we have this great tech. Are they plugged into a business? Are they actually making money? D-Wave works with MasterCard. They're working with Lockheed Martin or Volkswagen. They work with all types of industries, from automobile to space industry to finance, and even you could see them working with supply chain and all types of. You got food groups, you got Ford, Audison, you got Docomo, so uh, they're in the technical Internet of Things space. And here's why they have an advantage. They have a focus, D-Wave, on the quantum annealing, which is great for solving optimization problems. So logistics, could be AI and finance, and they're enterprise first. So they focus not so much on, like, let's say the technical breakthrough, or what we saw recently of two quantum computers communicating with each other from 10 feet away, just with light, just with a beam of light, and storing data in light. That's crazy. They're not having breakthroughs so much like that, but because they focus on the real world quantum solutions rather than just the research, they're seeing more of real world applications. So they're kind of the only quantum company. That's why we have them at number one, that is getting commercial customers and revenue generating applications today. Now, this is the big kind of problem with quantum D-Wave, is it's not a universal quantum computer. So D-Wave's quantum annealers can't solve all quantum problems. They can do cloud research, developer tools, research. They got quantum AI, but the annealers, they may limit some of its long-term potential compared to like IBM or Google, because they're just more having a commercial approach. But I think they have an advantage by having a commercial approach, and it makes a lot of sense for what they're doing. So the best pick for immediate impact in my eyes looks to be D-Wave, but it does look overextended right now. So when we're looking at short term or maybe like near term, over the next few years, like in the near term, it looks great. When you're looking really short term, let's say in the next week, it looks very volatile, and I would be extremely careful. But it seems like the best pick for kind of immediate impact. I think one of the best pure plays are definitely Rigetti and IonQ. They got a lot of partnerships. They got strong partnerships, and there's still kind of early stage revenue, but they're starting to see some of that play out, and they're starting to increase that. It's just the net income. But the best long-term investments too would be obviously Google and IBM. You just get diluted a little bit because of the, other parts of their business where they generate most of the revenue. So you're not really directly investing in quantum. But with those being said, I think quantum computing, not just my words, but take IBM talking, or Microsoft, or even IonQ when we were talking with their executives back in, was that February? Quantum computing is going to be a multi-trillion-dollar industry. So are you in it? Are you watching from the sidelines? That's the question. So comment below which quantum stock you are most bullish on and interested in. And also, if you want to watch me trade live at Market Open, again, we're going live. You could simply check the second link in the description, and we have a special sale for you if you want to be there. Surround yourself with other traders and investors and get our picks for this week and trade quantum, AI, and space tech stocks. Thank you guys so much for watching. Again, it's that second link below to watch me trade live tomorrow morning. I'd love to see you there. If I earned your thumbs up, hit that like button. Do consider subscribing, and I'll see you guys in the next video. Take care.